Good morning. It is Sunday, March 9th, 2025. It's just after 11 a.m. on the East Coast, and this is Robert Sin at CEO Technician on X, at Goldfinger on co.ca, and this is Goldfinger Capital on YouTube. Um, to start off the conversation, I want to talk about the broader market and sort of some of the key trends and cross currents out there, and then we'll delve into really the conversation du jour, which is U.S. gold imports and what's driving U.S. gold demand. So the overall market backdrop. So I'm talking about the equity markets. I'm talking about the S&P 500. I limited the number of charts up because, again, I could have 100 up, but look at the European market. So the CAC, the DAX, look at Italy. Um, wow. Europe is seeing big inflows into their stock market, and it has a lot to do, maybe everything to do, with the fact that Europe is promising and committing to increase its spending on its military infrastructure, right, in response to Trump 2.0 and their rhetoric around Ukraine and NATO. And suddenly Europe is awakening, right? It's awakening from a slumber. And if there's, you could say a lot of negative things about Trump and his administration, but one thing you can't say that's negative is that he's not a disruptive force and he's not forcing countries to rethink their priorities, right? I think Canada and Europe especially have been sort of asleep for a long time. Um, and there's been a world order in place essentially since the end of World War II, where the US is everybody's bodyguard, and the U.S. Military is supposed to patrol the globe and keep everyone safe. At least that's the theory, right? I know many people will argue and cite Iraq and Afghanistan, et cetera, et cetera. Okay, yeah, I get it, but in theory, that's how it has been for the last 80 years in Europe. Whether it's Germany or France or Spain or the UK, Europe has never felt that they were vulnerable to a military attack since the end of World War II. I mean, especially since, let's say, the 1960s, right? It's been a very safe place, and it's been a time of peace, right? And so suddenly, um, the the illusions are being torn away very quickly, and Europe is awakening, right? And so that has been positive for European stocks. Meanwhile, US stocks have rolled over pretty hard here at the end of February and early March. And just frankly, just looking at the S&P 500 chart to simplify it, if we pulled up all the different sub indices and small caps, mid caps, and the different sectors, it's ugly. It's a pretty ugly overall market backdrop here in early March. But just looking at the S&P, we got some buying on Friday. And the buying came in at basically the early November, basically right before the election low. Let's call it 566 on the SPY. That's where buyers stepped in on Friday, and they closed stocks near session highs. So I think we are oversold enough, and sentiment is negative enough that we could be in for one of those 2 to 3 day snapback rallies in the S&P. Um, yeah, I think that's reasonable. I think there's a lot of negativity out there, but very next sentence, this market is very damaged, and this is not the sort of setup where I see just like a V bottom going back to the highs. And context is key. And what led into this February March rollover in equities was a series of marginal new highs throughout January and February. Well, at the end of last year, then two more marginal new highs early in 2025. And these are very weak highs with pretty weak momentum, no volume confirmation, a lot of divergences across key sectors. Small caps did not follow through. Transports, did not follow through. Right? There's a lot of non-confirmations that occurred here in the last few months as the S&P made these marginal new highs. So and that's amid, we can talk about overvaluation. How it's the Mag 7 that drove these new highs, right? So overall, this was a very shaky market coming into February, and it's gotten hammered. It's gotten hammered, and for good reason. Huge amount of uncertainty around tariffs among all different sorts of government policies here. And until we get some more clarity, until there's some resolution with the US and Canada, until we know the rules of the road and what game we're playing, I would expect this market to be pretty volatile. And I would expect us to probably test lower in the medium term. Okay, so short term, in the next week, I could see a rebound. I could see some short covering. I could see an oversold bounce. But medium term, it doesn't feel like Friday's low is going to be the low. And even if it's the low for 2 to 3 weeks, we're probably going to be in a volatile range, back and forth range for a while until we retest Friday's low at the very least, right? So that's sort of my take on the broader market. Let's talk about Bitcoin before we get into gold. So Bitcoin getting hit a little bit here over the weekend. We're down to 83,500. And really, my comments on Bitcoin are pretty simple. And that is that when a trade is so obvious and everybody's waiting for the same exact catalyst, right? Like they were walking into Trump 2.0, it's no accident that Bitcoin peaked on January 20th. Okay, that was the day of the inauguration, right? January 20th, 109,356. That was the high, and it's been grinding lower ever since. And then we got the announcements last week about the crypto reserve fund and Bitcoin. The government's not going to be selling any of the Bitcoin it seizes in criminal investigations, et cetera, right? But these were all anticipated announcements, right? So there was nothing surprising. Now, that's not to say there couldn't be a positive surprise for Bitcoin a month from now or 3 months from now or whatever. But right now, everybody was already piled in, waiting for these catalysts, and now there's just no marginal new buyer, and there's people that are going to hit this market and take profits, right? And so that's what's happening. This is a very prominent double top, right? And almost everybody I talk to is bullish on Bitcoin. So when I look at a market where everybody, including people who don't really know anything about markets, are bullish and have a positive take on Bitcoin, and then I see this double top and a news failure, right? That's basically what the last week in Bitcoin was. It was a news failure. We got the news that everybody was waiting for, and the price action said, nope, not good enough, right? So it's a news failure in Bitcoin. And while I would love to be bullish on Bitcoin, and I'd love to say nice things about it right now, just calling it like I see it, which is all I can do, this chart, the price action, the context of this price action the last few weeks tells me that we're probably over the medium term going to test down into the low 70s. And that could be a tremendous, marvelous buying opportunity down there. But right now, trader hat on, you know, somebody who's seen a lot of these news failure events, seen a lot of price action, and looked at a lot of charts, I wouldn't try to call a bottom here at 83,000, right? I think that this market is in a little trouble, and there's a deeper correction on the way, right? So there's no reason to try to force it here, as the price action is pretty negative. Okay, so let's talk. And also, this is very interesting too. Look at this chart, the 4-week outflows. So we've seen record 4-week inflows into gold funds, almost $10 billion, and record 4-week outflows from crypto funds, about $3 billion. So just if we follow the money and the trend of the money flows, well, gold is bullish and crypto is bearish, right? And if we look where we're coming from, so look at all the crypto market cap charts going back to the end of 2024, the Bitcoin peak on January 20th, 2025, and then look at the gold charts and investor sentiment, and it's pretty telling, right? So this is not the time to necessarily trying to be pick bottoms in crypto and Bitcoin, but as I laid out in this post, the tailwinds are certainly there for the gold and gold mining sector, right? So what is going on with these record gold imports, right? Like, what's driving the overwhelming buying and consumption of gold in the US? I mean, this chart doesn't do it justice because we don't have February, and it doesn't show everything. At least I don't think this shows everything, in my opinion, right? These numbers don't necessarily match up with this number. So StoneX is a financial services company that has a specialty in physical commodities, right? So they know about gold, they know about gold bars, the physical gold, copper, et cetera, et cetera. And the CEO of StoneX says what we've seen in the past 8 weeks. So this was in February, at the end of February, he said this. One of the largest physical movements of gold from all over the world into the US, estimated at over 2,000 tons. Now, is it metric tons or is it short tons, right? Is it 2,000 pounds or 2,200 pounds, right? It says TONS, so it's short tons, but usually when we talk about gold, we talk about metric tons because it's global. But anyway, whatever it is, it's over $150 billion notional. The total dollar amount of that amount of gold, that weight of gold, is over $150 billion. And to see that kind of consumption, that kind of buying in 2 months, is unprecedented. It's literally unprecedented. Here's one of the articles talking about what Philip Smith said about this U.S. gold demand, unprecedented movement of physical gold into the United States, right? And so, yes, it's driven by tariff concerns. It could absolutely cause a different gold price in the U.S. as opposed to Europe or elsewhere, right? So that's definitely part of it. But there's got to be more to this. I mean, if we're like, even if we round it down to $150 billion, there's certainly not that level of, retail investor buying of gold, right? So this is institutional in nature, right? Retail investors might buy $500 million of gold in 2 months, that may be $1 billion, in an extraordinary circumstance, but definitely not 150 billion, not even close. So this is institutional. So we need to follow the money and ask ourselves, just like with China for the last 3 years, with a voracious appetite for physical gold, the People's Bank of China, both in terms of its official purchases and its stealth purchases, it has continued to stockpile gold. In many videos and posts, I've unpacked why I think they're doing that. What's the purpose of that? And we're certainly getting closer to maybe a revelation in terms of China's gold purchases, a more public, revelation. But why all of a sudden, after pretty tepid gold buying for much of 2022, 2023, and 2024 in the US, why this surge at the end of the year? Well, obviously, we know Trump was elected in November. The buying started very shortly thereafter, and it has continued to accelerate. So obviously, there's a pretty strong correlation there with Trump 2.0. And what is it exactly? Yes, tariffs are a big part of it. If you know that, let's say, all of a sudden on April 2nd, there's going to be a 10% tariff on gold imports. So gold is going to not cost you $2,900, it's going to cost you $3,200. Well, then you're going to buy it now and potentially capture that spread, right? So there's an arbitrage aspect to this buying. But also, if you buy $150 billion of gold, you have to store it, and then you have to find that future buyer to offload it, right? So it's such an extraordinary amount. This is not going to be sold at Costco or wherever on AppMex, right? It's such a big amount that it dwarfs the consumption from the retail outlets, right? So there's something else going on. And this quote, I believe it's from 2022 from Zoltan Pozsar, about a Bretton Woods 3, a new world monetary order, I believe helps us to explain what could be going on here and why institutions in the US appear to be front running what they see coming. So a commodity based system of currencies in the East that will weaken the euro dollar system and also contribute to inflationary forces in the West. So if you know that the dollar is going to weaken further, if you're very confident of that forecast, and you know that inflation is not turning around anytime soon and may actually be increasing, well, then gold, and particularly physical gold, is a natural investment opportunity, right? So not only are you capturing a potential arbitrage due to tariffs, but you're making a somewhat speculative wager on a weaker dollar, and a system that is more based on commodities with higher levels of inflation in the West because we don't produce the commodities. And if you look at Trump's executive orders, or at least we don't generate enough of them, right, to meet our own consumption, right? And so if you look at Trump's executive orders, including the executive order on copper, which should definitely have any investor raise an eyebrow. Why copper? Why this discussion of rare earths in Ukraine? And it all leads you back to this: a commodity-based new world monetary order, Zoltan Pozsar in 2022, right? And so that, I believe, is what's going on. And this is such a shocking amount of U.S. gold imports in just 2 months that I think we just have to follow the money. Sometimes you don't have to have all the answers to, today. There's just certain things in the future that are unknowable, but follow the trends, right? Money flowing out of crypto, out of Bitcoin, into gold, into copper. We've seen a copper rise in the last few weeks, and the dollar is rolling over. 10-year yield definitely in a new downtrend. It had a little bounce from very oversold levels last week, but this is more, to me, it looks like more of a dead cat bounce. And this take the administration at its word. We want lower interest rates. We're applauding lower mortgage rates. We're not focused on the stock market. I mean, they literally have said, we're not following the stock market day to day. There could be some more pain as we do this big adjustment in the U.S. economy. We're more focused on lower 10-year yields and a weaker dollar to stimulate our competitiveness in our exports, right? So take the Treasury Secretary, take the new administration, including the commerce guy Lutnick, at their words, right? Follow the money. So the dollar is definitely rolled over here, and they're not making it a secret that they desire a weaker dollar, and that could definitely be part of this Bretton Woods 3. Whatever is coming, like the Plaza Accord in 1985, whatever is coming, Mar-a-Lago Accord, whatever you want to call it, is most likely going to involve a weaker US dollar. So if you know interest rates are falling, and you know the dollar is going to get even weaker, and you know there's a good chance of tariffs coming on gold and other metals, well, there's your explanation for these record levels of US gold imports. As far as the gold chart itself, look, it's just been in a consolidation range. It's consolidating near all-time highs, above rising moving averages. Sentiment is not extreme, even though we're seeing these gold imports coming in here. All the sentiment gauges I look at, yes, bullish, but nowhere near extreme bullish, nowhere near the levels that would coincide with a major top, right? So keep it simple, stupid. I know a lot of people love to try to call tops. I just don't see it here. I think you're more likely to just lose money getting stopped out, um, trying to short this here right now. I mean, I think only the most nimble traders could try to call this top. I think it's way easier to just stick with the trend here, and the trend is higher in gold. I published this on Friday on my Substack. Gold miners had a strong week last week, and there's several reasons why that is, and I lay them out. It's a strong week for silver. Silver outperformed gold. When silver outperforms gold, that is usually the green light for the miners, and in particular, the smaller market cap miners, so the mid tiers and the juniors. And that's exactly what we saw last week. Also, for the juniors to really wake up and outperform, we want to see the dollar index continuing to fall and more Fed rate cuts, right? So we know that like the Fed kind of went on hold at the end of last year. They've been on hold here throughout Q1 2025, but maybe that's about to change in Q2. If we start to get more Fed rate cuts, if we see that 10-year note yield continuing to trend lower, that's going to be very positive. That's going to bring tailwinds for the junior mining sector. Also, the idea of more gold mining M&A coming, that's very supportive. And then analyst upgrades. So we're starting to get upgrades across the sector. And I point out this one particular upgrade by UBS of Barrick Gold. Barrick has been heavily hated. And in fact, at the end of 2024, look at where it got down to. On the NYSE, it traded as low as $15 a share. That's a multi-year low. It might even be a decade low. I'm not pulling out that chart now, but it's low. It's very low. And since then, Barrick's up 25%. Okay, it's not too bad. But investor sentiment on Barrick Gold is extremely negative. It has had many years of underperformance that contributes to that investor negativity. But as some very shrewd investors like to say, I love hate and I love to own hated stocks and sectors. Well, look no further than Barrick Gold. It is hated by investors, and UBS see some reason for optimism. And actually, they note that of the major producers, Barrick has organic growth coming over the next 5 years, and they actually see their gold production increasing to 5 million ounces by 2030 from the current 3.9 million ounces. So that is actually positive, right? They are actually growing. Yes, the past has not been good for Barrick. The past 5 years or whatever time frame you want to look at has not been good to investors. But if we look at the opportunity today for the next 5 years, Barrick could actually be one of the outperformers in the sector. Call me crazy. Yeah, and then in that Substack post, I talked about how the GDXJ outperformed the GDX, and we're starting to see smaller cap outperformance take hold. Let's see if it continues. Again, you want to watch that dollar, you want to watch 10-year yields, and higher probability of Fed rate cuts would be more positive for the juniors. Lower probability of Fed rate cuts would be generally negative for the juniors. And then I'll just say platinum. Check out platinum. This is also very under the radar metal. This is a monthly chart, but the global platinum supply is in deficit, right? So the world is consuming more platinum than it produces, and it's been doing that for a couple of years now, and it's looks like it's poised to do that again in 2025. About a 500,000 ounce deficit is forecast for 2025. So the above ground stockpiles are starting to dwindle for platinum. And there's a lot of other factors, including South Africa mining. Generally, that backdrop is not good. So there's a higher likelihood of supply shortfalls coming from South Africa. And then also sort of the pivot back to diesel and gasoline powered vehicles, right? We're starting to see more and more car manufacturers talk about how we're getting rid of our EV lineup. We're going back to fossil fuels, right? So that's generally positive for platinum, because every diesel powered vehicle, like, every one of those diesel powered vehicles requires about 5 to 7 grams of platinum for the catalytic converter, right? So that makes a difference. I mean, if there's another 100,000, diesel powered vehicles manufactured, it makes a difference in terms of that platinum deficit, right? It can make that deficit bigger, and it can bring more demand for the metal, driving price higher. It's a pretty thin market. It's a pretty small market. You can see it's a frustrating market that's been in a range for many years, but I believe this is one to watch in 2025, because it has the potential to break out, to break free from this consolidation it's been in for several years. So just food for thought there on platinum. Very under the radar relative to gold. So let's talk about some individual miners. I just chose four stocks, because the company Uber is definitely not a miner, but the other three are mining stocks. Ridgeline Minerals. So I made no secret, I own this one and I'm bullish on Ridgeline. Drilling has started at the Big Blue Copper Gold Porphyry project in Nevada. It has started. So they are, a few days into that first hole. Good news, on time, on schedule. That's what we like to see in the junior mining sector. And just as far as the price action, healthy consolidation here near 52-week highs in Ridgeline. Check out my latest conversation with Chad Peters, the CEO of Ridgeline, on my YouTube channel at Goldfinger Capital. San Lorenzo Gold, new gold, copper gold maybe, new discovery in Chile. Salvadora property in Chile, Cerro Blanco target. They released a very good hole. And I'm going to keep it super simple on San Lorenzo. I could talk probably for 30 minutes about it, but we're going to keep it super simple. Check out D-Man on co.ca, and I'll just read to you in case you can't see it. He is talking about San Lorenzo. Obviously, he's bullish. Know what you own. No property payments. No escrow. No royalty. All or most of the warrants at 18 cents have been exercised. They have money in the bank. The management team owns a significant chunk of shares. In fact, the CEO has actually loaned the company money, right? Several sets of high grade, intervals over multiple kilometers, 2 potential porphyry centers, top jurisdiction. It's Chile, where porphyries are abundant and some of the biggest mining companies in the world operate. Top infrastructure and near a world-class mine, right? And then he talks about how they drilled 150 meters of $100 per ton rock at Cerro Blanco, with copper increasing towards the bottom of the hole. And that hole, that 150 meters, is open at depth, right? So they could potentially continue to expand the mineralized zone at depth if they drill deeper in subsequent holes. So a pretty well laid out bullish thesis there from this poster on CEO.ca. And I think he says it well. I don't need to add to that. And we're seeing this volume and price explosion. Yeah, it's going to be a little volatile because it's a new discovery story, right? The trading float is not necessarily that big, and there's been a warrant, situation that will, an overhang that will expire this coming week, and it'll be interesting to see how the stock trades once those warrants are all in or they've expired, right, this week, and then the subsequent holes. There's two holes with assays pending. Once those are reported, we could see a very big move in the stock. And I say that it could go either way, right? It could go to 50 cents or 60 cents if the holes are spectacular, or it could come back to 15 or 20 cents if they prove to be duds, right? So just understand what you're playing with. This is a new discovery story. It's a junior. It's a relatively small market cap. It can be volatile. Expect it to be volatile for sure. Arizona Sonoran copper, ASCU on the TSX. So I believe Arizona is going to be a state of focus the next 4 years with this re-energized attention to made in America copper. So the U.S. copper mining industry looks to be supported by the U.S. government for the first time in decades, right? And so if I were you, I would do your own due diligence on Arizona copper miners, juniors, and producers. There is a potential catalyst coming up here over the next few months, and that is that big copper deposit, high grade, massive, and deep, called Resolution Copper in Arizona, could get the final green lights and federal approval to commence construction of that mine. If that happens, I think that's positive for Arizona copper miners, period, right? It definitely confirms the state is open for business and the new administration desires more production of U.S. copper. And so I would put ASCU near the top of that list of Arizona juniors to do more research on and put on your radar. And then Uber. So I just out of the blue, Uber. I like this chart. I like the setup. I like how this chart has held up under broader market pressure the last couple of weeks. It's consolidating above key moving averages. It actually came back to test that 40-day moving average, bounced off it nicely. I like this chart, right? So just purely from a chart technical standpoint, I like Uber here. And if I'm going to play this potential 2 to 3 day snapback bounce in equities, Uber is going to be one of those stocks that I choose. All right. And then final topic, lessons from my father. So today would have been my father's 95th birthday. God bless him. He was also a Robert. And I posted this blog back in March of 2024, and I invite you to take a look at it. It's on my Substack. It talks a little bit about him and how I got into junior mining and how he was sort of my gateway to it because he was an investor in the sector. But I want to point out one of the bullet points, one of the lessons from my father. And, like I recall having many conversations with him where we discussed making inventions and business opportunities. And he was an inventor, and he actually invented the first stock quote system in the early 1960s, and that was later sold to General Telephone. But that's neither here nor there. But he loved to come up with new ideas. He was a brilliant mind. And he used to always tell me when I said, "Dad, has everything been invented? Is that all that there is? Like, how can we create a new idea?" And he was always say, "There will always be opportunities for people who are creative and visionary and brainstorm new inventions. There's always new possibilities for inventiveness." And then seeing those ideas through to manifestation, right? To actually stick with them and not deviate from the path, actually commit and bring those inventions, those new ideas, those new visions into reality in the world, right? And so like every time I think, oh man, now with AI, there's going to be no opportunity for new ideas, I think back to his words, right? There's always going to be more opportunities. In fact, today, there are more opportunities than there were 10 years ago. And so this is like the seed of optimism that great thinkers, great visionaries, great business leaders have, right? Optimism, optimism for the future. I don't think anybody really gets rich or lives a happy life by being too skeptical, by being too negative, and by having the thought that the future is going to be worse than today, right? We need to have that optimism that tomorrow is going to be better and we're going to make it better, right? It starts from the inside and then it shows up in the world. So just a little bit of optimism, a dose of optimism passed down from my father to you. Happy birthday, Dad. And that's it on this Sunday. Thanks for tuning in. As always, I greatly appreciate your viewership and your time investment in my content. And if you enjoyed this video, hit the like and subscribe button and feel free to share it. Have a powerful trading week.